The correction in crypto may be reaching its end as momentum stabilizes. On-chain metrics show Ethereum being dumped by long-term holders, and volatility markets price in more risk to the downside as people pile into some hedges. All this and more in this week's Crypto Insight. So, I mean, crypto this week. We'd flagged that there was that key support zone in Bitcoin last week, which was somewhere between 54K and 58K. And we managed to get in there and stage a bit of a bounce off around 56K, touched around 60K, and now we've gone down again. Okay. We haven't broken below that zone, which is good news. So we're still consolidating, but the consolidation is taking just a bit longer than we would have thought. Now, remember how I was saying, well, I wanted to see some bullish divergence to feel comfortable that this correction was over. Well, had we just directly bounced off that 56 area the first time, well, we wouldn't have got that bullish divergence, right? But now we've retested those lows. The momentum indicator is not falling as low. We're starting to see, higher lows in the momentum indicator. That is signaling a potential bullish divergence. And we're in the key support zone again. So that's fairly constructive and suggests that we are nearing a potential local bottom where this thing could stage, a real rally from, right? And then that ABC correction that's taken a little longer than we thought may well have completed, right? So fairly bullish, looking at the technicals, not a disaster, I would say. Obviously, the break higher in the dollar hasn't helped, right? In general, crypto seems to have a bit of a negative correlation to the dollar, certainly at the moment. So just kind of, that's probably keeping a little bit of a lid on it. If we then look at Ethereum, the support levels I was looking at there were 41, 39, and 36.5. We've kind of managed to bounce the lows there around 39.50. Hasn't actually retested those yet. But again, showing similar sort of story where even if it does eke out a new low and gets near 39, it's probably going to do it with some sort of bullish divergence, right? So again, the technical's looking fine. If we look at the spread chart, certainly nothing sinister there. The spread has not rolled over at all. You often see, in a bear move in crypto, you often see this spread roll over and ETH has a bit higher beta to the downside. It's certainly not showing that at the moment, right? It's supporting itself quite well. Raul's been on the tape, going on about this 0.08 level, which if it breaks, he sees long-term potential for this thing to go to the moon. Obviously talking his own book there. I don't disagree, right? I definitely think ETH's got outperformance to the upside if this thing goes. But for now, we're still waiting to see that happen. Right now, this spread's kind of in no man's land. It's not bearish, but it hasn't broken the top side of that big resistance level either, right? So I'm still waiting and watching. Now, something I'm a little bit concerned about is one of the key figures within crypto, a guy called, I can't really pronounce his name, right? But a guy called Su, he has come out and said he's abandoned Ethereum, right? Which, you don't really want to see it if you're an Ethereum bull, right? So he said, yes, I have abandoned Ethereum despite supporting it in the past. Yes, Ethereum has abandoned its users despite supporting them in the past. The idea of, okay, and then he goes on to basically say, what else does he say? Ethereum culture suffers massively from the founder's dilemma. Everyone is already too rich to remember what they originally set out to do. Perhaps a bear market is needed to remind them, or perhaps we must build elsewhere. Okay, but this is what it is. Okay, nothing new under the sun. So I guess, a bit of disillusion there with what the guys are doing with Ethereum, with the extortionate gas fees and things like that. If they're really trying to build something for the future, they need to make it easy for people to transact and use the blockchain. It's just too damn expensive for most people, right? So they need to address that, and he's kind of stressing the importance of that, basically, right? But some people are saying that maybe led to a bit of the kind of bearishness in Ethereum lately. Okay, now Not just that, I mean, another thing, and this is quite cool. So, you know, we obviously got the Glass Node guys who put out on-chain metrics for Bitcoin and ETH and stuff like that. You've got a few other people join the bandwagon there. Yeah, it's a macro hive. They're a macro service. They're pretty good. They basically they look at on-chain metrics as well, and they kind of summarize it to get a read on what if it's net bullish or bearish for ETH and Bitcoin, right? So I nicked a few charts off there to show you. So they're basically seeing a bit of bearishness coming out in Ethereum as well from the on-chain stuff. The way I'd summarize it is, so they're seeing ETF, they look at ETF flows as a sign of what institutions are doing, and ETF flows have been slowing down. So they haven't become outflows, but they're slowing down the inflows, right? Which is a net, at the margin, net bearish, right? You've got open interest on futures has been rolling over a bit as well. That's an incremental net bearish, right? You've got long-term holders have been decreasing. So you can see, if you look at long-term, calling different buckets, 2 to 3 year, 3 to 5 year, 5 to 7 year, these guys, the percentage of ETH that they're holding has been dropping. So they've been getting rid, basically, right? So when you see long-term holders getting rid, is that bearish or bullish? There's kind of schools of thought there, basically. But the idea is that some of these long-term hodlers of ETH have been kind of letting go, which isn't great. The one kind of saving grace, if you look at the exchange balance, that's still pretty low, or, you know, close to recent lows. So it's not like people are throwing loads of ETH back onto exchanges, so they're ready to sell it, basically, right? So you know, maybe at the margin, some slightly bullish things, bearish things popping up on Ethereum, but, you know, I'm not overly concerned, basically, right? I think the technicals look fairly solid right now. And, you know, we were all expecting, you know, it makes sense that the whole world got bullish. Makes sense we're getting a flush out. We've seen a bunch of liquidations from levered money, right? And now if we can hold on to these levels at around, you know, 39K on ETH, 3,900, sorry, on ETH, and 54K on Bitcoin, then I think we've definitely got some potential to stage a rally into year end, right? Those people who've been using November calls are probably not going to get much love out of those, right? But I think December, you've still got half a chance of getting a bit of a rally. Okay. All right. So that's kind of where we are, what I'm seeing, what's interesting on the on-chain stuff, and particularly in Ethereum. Now, if we look at some of the volatility stuff, so this kind of shows you over the last week or two, we've got the historic realized vol in blue, we've got the implied vol in pink, been fairly stable. That's kind of like the 2 to 4 week implied vol. So you can see the spread had got pretty wide, about 30 vols, and it's kind of come into closer to around 20. So it's coming in a bit as realized is basically popping higher, and implies are kind of staying where they were, right? Because obviously implied stayed elevated because they were expecting some volatility. We got the volatility, so implies don't need to keep going higher, right? That's kind of, that tends to be how it works, right? That's what I'm seeing on realized. So realized implied spread converging a bit. Now, those pink bars at the bottom are quite interesting, right? And these are obviously the Genesis vol charts that I use these days. And they kind of show you where the realized vol is in terms of time of day and also day of the week, right? And see if there's any big kind of disparities. So you can see, shouldn't be a major surprise that Saturdays and Sundays, you generally see a bit less vol, okay? Because there's less activity going on. And then Wednesday is your peak of volatility in terms of day of the week. And then it's also got, you can see the concentration across the day, and generally the second half of the day seems to where you get the bigger spikes in volatility, basically, right? I just thought those bar charts quite interesting. Not something I really kept an eye on much, but now that I've seen it, I'm going to probably do that and see if anything's changing there, or if that's just quite a consistent message of how the realized volatility kind of plays out in time and day, basically. Yeah. In terms of what the term structure has been up to, so week on week, no major surprise, right? We kind of said that we thought the curve was too flat. The minute we got some stabilization, it was going to collapse. It's kind of exactly what happened. You know, it's a bog standard volatility gravity type play. That front end went back from 95 to 70, and then the kind of, you know, stuff that's over a month and the December onwards kind of stayed where it was. So, you know, obviously we had flagged in the GVol newsletter last week that as a pure vol play, and, you know, Hussein kindly shared with us that he'd done this trade as well. basically the 3rd of December, regular December trade was quite a nice way of doing that. And I usually like to do these trades with a bit of a delta bias as well. But if you just wanted to put it on delta neutral, the vol play was there for the taking, right? So you can see in this chart here, you've got at the money vol on 3rd of December versus end of December. They'd got to the same vol about a week ago, about 85 vol. And you saw as we headed into the weekend, as we made those new highs, that got to around 72 versus 82. So that spread went from 0 to around 10 vols. So those term structure trades are a really, really nice way to play that normalization in vol when that curve flattens, right? And there's a prime example, right? It had recovered a bit, but now it's back to fairly wide again. So that's been quite a successful trade, that one. Yeah. So that's kind of term structure, what's been going on in Bitcoin term structure. If we now move over to skew, so kind of the same pattern that we've been seeing for a little while, where put skew has really become more in demand as the excitement around, oh my God, the breakout's happening has kind of died down a bit, right? So you can see in the top chart, it's showing, you know, the 7-day out to 6-month skew, generally just trending lower, obviously more violent price action coming out, the super short dated ones, which are 1 week and 1 month, where the skew has got down to, you know, -7, so 7 vols for puts over on the 1 week and maybe around 5 for the 1 month. And then obviously ETH, if you look at that, that's been a bit more dramatic even. Obviously it got really, really steep for calls earlier in October, but that's completely rolled over. You've got longer dated calls still kind of hanging in there around 5 vols for calls. But if you go to kind of the 2-month stuff, that's neutral. And the super short dated, like 1 week stuff is close to 12 to 15 vols puts over. So definitely some demand for hedges coming out in Ethereum. And we're seeing that reflected in the pricing of the skew. Yeah, it makes sense, right? If you've got people like that guy dumping Ethereum and calling that out, then maybe that's making people a little bit more nervous. Okay. And then if we focus a bit more on Ethereum, I had flagged to subscribers that I've added to some Ethereum, you know, using this dip to kind of get some longs back on board. My preferred way of doing that, as you guys will know, is to kind of own December calls in that 5,000 area and then sell 10,000 calls in January against it. So I had been selling March calls, obviously, when March got ridiculous. But I know there's a structural big short position out there in March. So when I add new risk and I want to put on new trades that make sense, I'm going to factor in the supply demand imbalance. And if I don't need to sell March because there's other good things to sell, then I won't bother selling March, right? So what I've done here is I've got the January versus December at the money vol up here. And you can see quite a big differential there. Just for the at the monies, the differential is about 10 vols, deck cheaper than Jan. And then when you look at the skew in January, you can see that the volatility on the 10,000 strike in January is like 125. So you've got about a 20 to 25 vol differential between owning December 5,000s and January 10,000s. So doing that call calendar as a ratio allows you to get yourself long ETH, allows you to carry in a nice positive way, take advantage of the term structure, take advantage of the fact that people are still willing to pay up for those January calls. All right. So that's kind of how I've expressed my view there. And that decays pretty well and gives me plenty of time for that to play out. As we get into early to mid-December, if I don't think my 5,000 calls are going to make it, then obviously I'll do something with them, roll them, or whatever the case may be. If we look at the flows, the big blocks and the flows that have been going up, then you've got Bitcoin here, you know, fairly balanced, sort of 40-60 in terms of calls and puts, 60 on calls, 40 on puts. But, you know, for me, if I look at the kind of bar chart and I look at the colors there, what stands out, I'd say lots of green bars, which are November. That's just people cleaning things up for expiry, right? Obviously, we're approaching expiry this Friday. You know, having a look at, I quickly looked at the max pain points, 58K on Bitcoin, 4K on ETH. We're kind of in that vicinity, right? So does that mean we kind of hang around here till Nov? Maybe, right? If you look at the biggest sort of contracts that have been trading, there's the 40,000 strikes here in March and June. So that looks like some people kind of putting on some hedges. in the longer dated part of the curve, which isn't something we've kind of seen much. Generally, people are more bullish on the longer end. So that's interesting, starting to see the first signs of hedging going on. I don't know if those are put buys or sells, but I'm gonna assume, given what's been happening with the skew, that those are probably put purchases. Okay, so that's what I've been seeing flow-wise in the likes of Bitcoin. Now, if we switch over to ETH, so still a massive skew, a bigger skew towards the call side. We've got 70% calls. And if you want to see where the maturities are, where you've got these big pink bars showing you December around the 5,000 strike and the 6,500 strike. So those are the ones where we've seen the most activity in Ethereum. It kind of makes sense, right? If you're going to play year-end rally and you're going to buy calls on deck, that's kind of the areas that you're going to be looking at, basically, right? My target for ETH year-end conservative target was around 6,500 if we got the rally. So it kind of makes sense. People are targeting 5K up to that area. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.